Well, tax season is almost over for those who are extending their taxes, so we want to just spend one last moment talking about taxes, make it as painless as possible. And I've asked Charles Almond to join us. He's been representing individuals for 30 years, is president or CEO of Taxpayers Clinic, and he's here with me to talk about paying back taxes. Welcome to the show, Charles.
Well, thank you, Steve.
Just how large a problem are back taxes for Americans? Give us some sense of this.
Well, there's 30 million taxpayers, really a little bit more if you talk about the underground economy, but on the books there's approximately 30 million taxpayers that owe the IRS money. So that's a
And,
big problem. I
yeah.
mean, when you look at the workforce, when you eliminate the population from students and children and, the elderly on fixed income, so forth and so on, we're talking about 1 out of 6 people in America more than likely has a balance due with IRS.
A balance due with the IRS. Really? So how do they get themselves into that situation?
Well, the most classic example is the self-employed environment. IRS has come out for, longer than all of your audience has been alive with this concept of estimated tax payment for self-employed, people that don't have W-2 income and aren't withheld at the source. And as a result, they've got these 4 vouchers. It's 1040-ES is the form. The 4 vouchers provide that taxpayers should send in what tax is not being withheld but should be voluntarily remitted on April 15th, June 15th, September 15th, and January 15th of each year, respectively. The problem is just because the calendar page turns to these dates doesn't mean that 3 months' worth of taxation are present in anybody's checking account to remit.
I see.
And that, I think, is the biggest fundamental problem. 95% of all business in America is small business, and small business employs over 2/3 of the workforce, and it's a huge problem. And what we do as a firm is encourage people that are in self-employment when they seek to get back in the system, and that's, of course, what we're dedicated to doing, is making sure they get back in the system successfully, is to send in their estimated tax payments monthly. And remember, it's on income. So for those individuals that are self-employed, have a small business, so forth and so on months where they're breaking even or they show a little loss from their operations, then there's no duty to pay. When they calculate what they owe, they take their applicable percentage, which is, you can look at your last filed tax return and get a sense of what your applicable percentage is, send it in, and guess what? Over 30 years, we've got most of our clients remaining in compliance. I would say over 95% of all people that have come to the firm have remained in good standing from our help.
What happens if you don't pay your estimated taxes on time?
Well, IRS has super powers. They're also a super priority under any context of law you want to talk about. Their powers are such that Congress has enabled them to just basically issue a form. There's no hearing, there's no discussion, there's no conversation, there's not necessarily a dialogue. If a taxpayer who's delinquent gets their notices of balance due and they don't respond or react or pay or make some sort of arrangement, then IRS issues bank levies against bank accounts and so forth, and they issue wage or other identifiable source of income levies against the type of income that a taxpayer has that IRS knows about. And, of course, IRS does know where you get your income because of 1099 reporting, K-1 reporting, W-2 reporting, so forth and so on. So, the American taxpaying public out there, once they've filed a tax return, or actually in the absence of filing a tax return, IRS has the power and authority to prepare a tax return in the absence of a filed return and assess a taxpayer. And these assessments are very punitive. They're called substitute for returns, and they're predicated on the maximum tax rate against all identifiable income without regard to deductions, credits, exclusions, or exemptions.
If you just joined us, we're talking about back taxes. We're talking about the payment of taxes. My guest is Charles Almond from the Taxpayers Clinic. This is On the Money. I'm Steve Pomerantz. One of the best ways to resolve a back tax issue when you have no means to pay is something called a non-collectible status with the IRS. What is that, and how does that work?
Well, in our experience, over 90% of the taxpayers we've represented qualify for a resolution program the IRS has. Well, let me explain a little bit about resolution. Full payment. In other words, if you got a back tax bill, say $10,000, you full pay it, by God, you've got a resolution. That's the optimum resolution. The next one is a part pay agreement. Somebody sends in a couple $100 a month until it's paid. That's a form of resolution as well. Then there's also a status IRS can confer on people that owe back taxes called currently not collectible. And once the taxpayer submits to the form in proper form, then if IRS makes a determination that the taxpayer's got no ability to pay, then they're relieved of the present obligation to pay, and IRS will agree to make no further effort to collect. Now, again, in our experience, 90% of the American taxpayers qualify for currently not collectible, so it's a wonderful way to resolve a back tax problem. It does require you submitting to the form, and that's what we've been involved in for 30 years.
Well, how does the IRS make that determination that you're unable to pay?
It's a procedure. They've got a collection information form. It's a 6-page form for individuals and a similar form for businesses, and it's a full disclosure document. It's your current financial condition. It has nothing to do with your history. And why you're delinquent, why you had an inability to pay on time with your returns isn't relevant. And most people think, oh my gosh, I've got this guilty conscience, and IRS really isn't going to like the facts and circumstances that brought me to this point in time where I owe this much money, 50,000, hundreds of thousands. I made some mistakes. I'll take the blame. Nothing I can do about it, spilled milk. None of that is relevant. Nobody at IRS sits in judgment of why a taxpayer's got a balance due. When I say taxpayer, I'm talking about businesses as well as individuals.
Mm-hmm.
But what you do with these IRS forms is you complete them. There's a volume of taxpayer rights associated with the presentation of a taxpayer's ability to pay. In an ideal world, they'll take advantage of those taxpayer rights, submit the form. IRS goes through the resolution process, in other words, qualifying them that, well, it's obvious you can full pay, and let's make arrangements for full payment. It's obvious you can't full pay, but we do see some ability to pay, so let's create a part pay agreement. And then, as I said, 90% of the time, our experience is IRS will acknowledge and agree that there's no ability to pay currently, and as a result, they'll get conferred a status called currently not collectible. And again, the vast majority, what I've seen is 90% of America qualifies for it. So it's something to be brought into. In other words, it's nothing to necessarily fear just because IRS is in hot pursuit of you, or they're sending levies to employers or banks or so forth and so on. A levy is nothing more than an invitation to submit to the form.
What makes a taxpayer well equipped to go not against the IRS, but up to the IRS and to face them, under the law? Where does a firm, and there are many like yours, like Taxpayer Clinic, where does a firm like yours come into the situation to right or wrong?
Well, there's a great propensity for procrastination in this country. So as a result, we've seen most of our clients cross our threshold when either IRS has levied something, a levy has taken something from someone, their wages, income, bank account, or when IRS is looking for them, like somebody comes to the mother's home, where they used to live, the mother calls the son, the daughter, says, IRS is on my front porch, they need to talk to you, oh my God. The sense of procrastination, it's sort of when it hits, and boy, oh boy, when it hits, that's when everybody sort of runs for help. And we've always been here, like I said, for 30 years to provide that help and make the situation get resolved. And it doesn't take months or years to accomplish. Normally, the turnaround time can be as little as a couple of days, as long as a week or two. But there are many experiences out there in dealing with some of these 800 television firms where someone takes the case and it goes on for years and nobody talks to anybody and the situation gets aggravated. I would just tell your listening public that the remedies are very quick and efficient and lasting.
So avoidance is not a strategy.
Well, it's not a good strategy, and at some point there's going to be a day of reckoning.
Yeah,
short of leaving the country, and expatriation isn't anything a family man can do, or a wife. You have to address it, and clearly the best way to address it is straight up with someone who's intimately familiar with your taxpayer rights and knows how to package and present your current financial condition. And again, your listening public should be well informed that 90% of the time, IRS will relieve you of the back obligation to pay.
Interesting fact. For more information, how do individuals find you on the internet?
taxpayersclinic.com.
taxpayersclinic.com. My guest is Charles Almond of Taxpayers Clinic. Thank you so much, Charles.
Thank you, Steve.
Charles.